Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. What if I asked a question, who actually controls the economy? It's not the president, it's not Congress. It's something most people don't fully understand. The central bank. In the United States, that's the Federal Reserve. In this video, we're going to break down what a central bank actually is, what the Federal Reserve does, and how it directly impacts your money every single day. Before we jump into the video, I do have a quick favor that really helps grow the channel. If you want simple, non-confusing explanations of money and the economy, consider liking the video and subscribing. All right, let's break this down. What is a central bank? At the most basic level, a central bank is the bank for a country, but it's not like your normal bank. You can't open an account there. You can't walk in and deposit money. Instead, a central bank manages the entire financial system. Examples of a central bank would include, here in the United States, we have the Federal Reserve, the European Central Bank, the Bank of England. Their job is to keep the economy stable. That means controlling inflation, supporting jobs, and making sure that the financial system doesn't collapse. Okay? Now, what exactly is the Federal Reserve? We just said Federal Reserve is the central bank of the United States. Okay? What is the Federal Reserve? The Federal Reserve is often called the Fed. You'll hear that term a lot. The Fed is the central bank of the United States. It was created in 1913 after a series of financial crises, including the Panic of 1907. The idea was simple: create a system that would step in during economic emergencies and prevent total collapse. Today, the Fed is one of the most powerful financial institutions in the world, and its decisions can move global markets in seconds. All right? The Fed has three main jobs. The Federal Reserve has what's called a dual mandate, but we can break it down into three simple jobs. All right? One, control inflation. Fed tries to keep inflation around 2%. Too high, prices rise; too fast, too low, the economy slows down. Second, maximize employment. They aim for a strong job market, not zero unemployment, but a healthy balance. And third, keep the financial system stable. During crises like the 2008 financial crisis, the Fed steps in to support banks and the markets. Without this, the entire system would freeze. All right, so how interest rates play into all of this, or how do the interest rates work? This is where things get real. The Fed's main tool is interest rates. Okay, when the Fed raises rates, borrowing becomes more expensive, people spend less, inflation slows down. When the Fed cuts rates, borrowing gets cheaper, people spend more, the economy speeds up. So if you ever wonder why mortgage rates or credit card rates change, it often starts with the Fed or the Federal Reserve. So why inflation happens with all of this? How does inflation happen with all of this, okay? Inflation is simply prices. Inflation is more than just prices going up. But why does it happen? Usually because demand is stronger than supply. The Fed doesn't directly control prices, but it controls demand through interest rates. That's how it indirectly manages inflation. But here's the tricky part. They're always reacting to the economy, not controlling it perfectly. Okay? Quick pause here, guys. If you want more simple breakdowns of how money and the economy actually work, make sure you're subscribed and drop a like. That's how I know to keep making these videos. Now let's hop back into learning about the Federal Reserve. How does this all affect you? This isn't just economic theory. It hits your life directly. It hits my life directly. The Fed impacts our mortgage rates, our car loans, our credit card interest, the job opportunities, even the price of groceries. So when you hear the Federal Reserve, when you hear something like the Fed raised rates, or when you hear me say something like that, what it really means is money just got a little bit more expensive. Okay? The big picture on all of this, here's the reality. The Federal Reserve doesn't control everything, but it influences almost everything. All right? And its decisions kind of have a ripple effect throughout our economy. Banks, businesses, jobs, your wallet, your bank account. That's why people watch the Fed so closely, because when it moves, the entire economy moves with it. Okay, so now you should kind of understand a little bit better about what a federal bank, a central bank is, what the Federal Reserve does, and why it matters to you. If this helped you kind of understand a little better how the system works, drop a comment and let me know what you thought. If you want more breakdowns like this, make sure you like and subscribe. Again, this is Evanomics, where we make economics make sense. I'll see you on the next video. Thank you for tuning in.